marks 2 times so far in the 2 exams out of the 4 exams that have been conducted for CA Foundation. 2 exams, one of the 4-mark questions was from depreciation. So I would recommend it's either from depreciation or it's either from rectification. 2 times from rectification they have asked, 2 times from depreciation they have asked. So one practical question will be there apart from the true or false questions and the theory question in the first question of 20 marks. One practical question would be there, and it has been coming from either depreciation or rectification of errors. So with that point of view also, this particular chapter is very important because it's a compulsory question. This will be on the face of your question paper. When you look at the question paper, it will be in the early pages. So this will help you build that motivation required for the paper, the rest of the paper. So shall we begin? Shall we begin? Is my voice audible? Am I audible? Am I visible? Yes. Okay, wonderful. Yes. So depreciation accounting. Let's just look at some basics before we get in there. Let's just understand what is depreciation quickly. Okay, we know what is depreciation. Most of us know it, but just quickly we will get through it. Shall we start? Shall we start? Okay, great. I want some energy. Okay, I want some energy from your end. Show the energy. Show that enthusiasm. The 17-year, 18-year, 19-year-old energy. Don't be like a 45-year-old guy, okay, or a girl, or not girl, woman, lady. Okay, depreciation accounting. What is depreciation accounting? Quickly, depreciation accounting means depreciation accounting means first of all the concept of depreciation. Now, before we begin this, I'll quickly run through something that I had told before. I'll just run through the memory lane of something that we've already discussed. The capital expenditure versus revenue expenditure concept. Capital expenditure versus revenue expenditure concept, if you remember. What was capital expenditure and what was revenue expenditure? Sir, capital expenditure is treated as a fixed asset. It is treated as an asset. It is shown in the balance sheet. Examples, sir, machinery, purchase of machinery, purchase of land, purchase of building. All this is known as, capital expenditure. It is shown as an asset in the balance sheet. Now, please pay attention over here. Is it not expense after all? Even if it is a capital expenditure, is it not an expense? Yes, it is an expense. It is an expense. The only difference between a normal expense, revenue expenditure and capital expenditure is the difference is the benefit of the capital expenditure is long term. That means it will last for more than 1 year. The benefit of such expenditure will last for more than 1 year. That is why we call it as a capital expenditure. If I have to give simple example, what is the difference between you paying taxi rent and you buying a car? What is the difference between the two? There's a lot of difference between the two. When you pay taxi rent, your benefit of that expenditure is only for one ride. Let's say you're going to Mangalore from Udupi or from Mangalore to some other place you're going. So you pay that amount to the taxi guy. He will take you to Mangalore and get you back from Udupi. Get you back from Mangalore. So now this is all. You won't get more than this. The benefit of that expenditure got over. But this is not the case when you buy a car. When you buy a car, you can go to Mangalore how many ever times you want to till the car is running. You can keep using that car multiple times. So the benefit of that is the difference between capital expenditure and revenue expenditure. The benefit of capital expenditure is for more than 1 year. That doesn't mean that it is not an expenditure. It is an expenditure, right? Buying a car is also an expenditure. That also you have to pay money for it. So that is also an expenditure. Only way we book that expenditure is, how do we book that expenditure is, we defer or we don't book it in 1 year's we don't book it as an expense for just 1 year. It is an expense for multiple years, because you're going to use that card for 10 years, 8 years, 5 years, how many ever years you're going to use it. You're going to call it a you're going to defer that expenditure and you're going to book it as an expenditure. We call it as an asset. Yes, it is an asset for us. There's a physical presence of that card, but the asset keeps on depleting. The value of the asset keeps on coming down. So that is why it is written off in the books of accounts. Now, this writing off, that is taking a part of the asset every year and booking it as an expense, is known as depreciation. What is it known as? Depreciation. Every year you have to book a part of that expense, right, of that asset as an expense. So that is known as, that is basically we're splitting the capital expenditure into small revenue expenditures throughout the life of the asset in the name of depreciation. That is what we call as depreciation. That's all. Now, in the newer accounting standard, that is AS 10, they don't use the term fixed asset, they use the term property, plant and equipment, which means the same. Okay, this is what AS 10 is saying. Property, plant and equipment. This is a westernized term. This is a term which has been used in the Western, that is US, mainly US. They use this term globally. They use this term in the IFRS also. They don't call it fixed assets. They call it as property, plant and equipment. So India also has adopted Ind AS now, which is in line with IFRS. So we also call it property, plant and equipment, PPE. So these are assets which are held for production of supply of goods or services or rental to others or for administrative purposes, are expected to be used during more than a period of 12 months, that is 1 year. These are also called as fixed assets in common parlance, common language. Now, concept of depreciation. What is this depreciation? Every asset loses its value over time. Every property, plant, equipment loses its value over time, except for land. Fixed asset, every fixed asset is known as a depreciable asset, except for land. Land is not known as depreciable asset because land doesn't lose value generally. Land doesn't lose value. Now, what land you're staying on, it was the same land your ancestors also, when you were there, it was the same land. It hasn't lost value. It has unlimited useful life. So land is not known as a depreciable asset. Other than that, every asset, fixed asset, tangible fixed asset, goes through this. Every tangible fixed asset goes through this. That is, when you use the assets, the value of that asset comes down. You buy a new car, you use it, you drive it, the value of the car comes down. Or just a reflection of time. You don't have to do anything. With the passage of time, the asset loses its value. And the third one is because of obsolescence. Obsolescence means the technology being obsolete, outdated. The technology keeps changing, right? In today's time and stage, you see all these machineries and all that keeps getting, it's very dynamic. That's right. It's very dynamic. With modernization, with more technology, newer machineries with lesser human intervention are coming. Artificial intelligence is being introduced in many places. So I was just seeing, yesterday, I don't know how many of you follow tennis, but yesterday there was an incident that happened in US Open where Djokovic was playing. Yes, he was by mistakenly, unintentionally hit a ball with a little anger, and that ball hit a line referee and on the throat. Line referee on the throat, and the line referee fell down because of that. It was unintentional. So now people are saying, why shouldn't we get technology? We can adopt. We can actually remove that person from there, and we can get technology over there. All that person, whatever that person does, technology also can do it. He's alive. Nothing's happened. But it was a lady. Nothing's happened. But he was disqualified from the tournament. He was a favorite to win the tournament. He was disqualified for a mistake that he did. It was not a mistake. It was probably something that came instinctive. It was instinctive from his hand. But it hurt someone, and as per the rule book, he was disqualified. But this has sparked a debate now. Should we get technology over there also? So you see technology being adopted everywhere, and this uh, also makes from the tournament itself he was disqualified because of that 1 second mistake. Yes. So that is what I was telling you. The technology is far changing. It can replace human beings anywhere now, anywhere, in the tennis court, in the banking sector, anywhere for that matter. Uh, you can replace human beings. Machines can replace human beings, if not completely, to a great extent. To a great extent. Of course, when it comes to things where you have to apply artificial intelligence, might not be so effective so far. I don't know, in the future it might be, but right now it will not be you know so effective. So what I'm trying to tell you guys is technology is changing, and with that the assets, the machinery's technology also gets outdated. Because of that, there is loss of value in that machinery, so the machinery's value come down because of this. Okay. Now what I will do is I will talk about depreciation in very simple terms. Now you look at a scooter, right? Let us assume a value for this scooter. Let us say the value of the scooter is 60,000 rupees. How much is the value of the scooter? It was purchased for 60,000 rupees by a company, food delivery company. They bought this scooter for 60,000 rupees. Is everyone with me? Yes. So this is an asset for that particular company. Okay, it was bought for 60,000. They said, useful life. They assumed that the useful life, estimated the useful life of the scooter as 5 years. How much did they estimate the useful life as? 5 years. So please pay attention. The whole of depreciation concept I'm going to cover in this slide only. So please pay attention. So the asset value was 60,000. So we will assume that each of these boxes worth how much? Can you guess? If the asset value is 5,000, can you guess the value? How many boxes do we have? How many boxes do we have? We have 12 boxes. We have 12 boxes on the screen. Can you tell me what is the value of each of these boxes? Very good. The value of each box is 5,000 rupees. The value of each box is 5,000 rupees. So, how much is the value of the scooter? How much is the value of the scooter? 60,000 rupees is the value of the scooter. Assuming that the useful life of the scooter was 5 years, I told you, and the scrap value. What do you mean by scrap value? Can someone tell me what is this meaning of scrap value? Scrap value means a residual value or resale value at the end of the useful life of the asset. Salvage value or simply Gujri value. Okay. So none of the asset, what do you call it? Bangar, right? None of the assets, especially these machines, cars, scooters, and all that. Do you think the value becomes zero of that particular asset? Does the value become zero? The answer is no. It doesn't become zero. There will be some value left, even if it is not in running condition. Even if that asset is not in running condition, there will be some value to it. For example, the metal involved over there, some part involved over there. If no one is buying it, the guy at the scrap will buy it. The scrap guy will buy it. The Gujri guy will buy it. So every say motor vehicle, machinery, anything you call, there is some scrap value, there is some Gujri value to this asset. Let us assume the scooter has a scrap value of two boxes. Two boxes means how much is the scrap value? 10,000 rupees. Okay, the scrap value is how much? 10,000 rupees. Now, how does depreciation work? I'm assuming straight line method. Straight line method means uniformly we have to depreciate the value of the asset. Uniformly we have to depreciate the value of the asset. Can you tell me, I have a question. What is the useful life I told you? Answer these questions, please. What is the useful life I told you? 5 years. What is the cost of the asset I told you? 60,000. How much is the scrap value I told you? 10,000. So could you tell me over 5 years how much value reduction happens in the scooter, how much value reduction happens, how much value loss happens. It is 60,000 minus 10,000, right? That is how much the value has been lost. How much total value lost during 5 years is 50,000 rupees. Now this is known as, that 50,000 rupees is known as depreciable value. What is it known as? Depreciable value. I'll just write the facts of whatever I'm talking over here. What is the cost I told you? Cost is 60,000. Scrap value is 10,000. Useful life is 5 years. Now, the value that is reducing over 5 years, how much did you tell me? 50,000. That is known as depreciable value. What is it known as? Depreciable value. This is nothing but historical cost, which is cost. This is historical cost. Historical cost minus scrap value, which is equal to 60,000 minus 10,000. So we have learned the concept of depreciable value. Depreciable value is the value of an asset which is lost over the useful life of the asset. Depreciable value is the value of the asset that is lost over the useful life of the asset. That is known as depreciable value. I hope everyone is comfortable with the concept of depreciable value. Yes. Moving ahead. Now, we have to depreciate how much value of this asset. Should we depreciate full 60,000? No. We should depreciate only 50,000. We are going to depreciate it on simple average. This is known as straight line method. Simple average. How many years? 5 years. So, depreciable value divided by 5. How much should we depreciate every year? 10,000 rupees is to be depreciated every year. So, this is the amount of depreciation. So, look at this. So, this depreciation will be booked as an expense in the profit and loss account. Revenue, expenditure, it is treated as, and it is booked in the profit and loss account. Which side? Can you tell me profit and loss account? Which is the expense side over there? Debit side or credit side? It is the debit side. Okay. On the debit side of the profit and loss account, through depreciation account, we open the depreciation account, we transfer every year the depreciation amount to the depreciation account, and from the depreciation account, it is transferred to the profit and loss account. I will repeat this again. How do we transfer? From asset account, we transfer it to depreciation account. From the depreciation account, we transfer to the profit and loss account. Journal entry. Can you tell me the journal entries for this? First, when we transfer, can you tell me asset account will have debit balance or credit balance? Asset account will have what balance? Debit balance. If you have to transfer something from the asset account, should you debit the asset or should you credit the asset? We have to credit the asset. We have to transfer something, right? And you have to debit an expenditure. You have to debit an expenditure because depreciation is an expense account. So can you tell me what is the journal entry for this? Depreciation account debit to asset account. The entry to transfer depreciation amount from the asset to the depreciation account is depreciation account debit to asset account. Is everyone comfortable with this? Are you following? I'm not writing this down, but I hope you're listening to all this. Yes. Now, from the depreciation at the end of the period, every year, like every other expense is to be closed, right? Every nominal account is to be closed. How do we close a nominal account? By transferring the balance in that nominal account to which account? To which account? Profit and loss account. So can you tell me what is the balance in depreciation account now? Is it debit balance or is it credit balance? It is debit balance. It's an expense account. It will have debit balance and you just transferred from this account to that account. Debit balance will be there. So how do we transfer from there to profit and loss? Profit and loss account debit. Profit and loss account debit. That is why visualize on the profit and loss account, you write it on the debit side to depreciation account. Profit and loss account debit to depreciation account. This way you are closing the depreciation account. Depreciation account is just a vehicle. Depreciation account is just a vehicle. It is doing nothing. At the end of the year, you are opening it, you are adding the depreciation over there, and you are closing the depreciation account by transferring the balance to profit and loss account. So it's just a vehicle, it's just an expense. It will just disclose how much is the depreciation during the period. That is all you're doing. So 5 years was the useful life of this asset. Every year, can you tell me how much is the depreciation amount I told you? 10,000 rupees I told you. So every year, 10,000 rupees will be transferred to profit and loss account. Now I have transferred for 1 year, I have already transferred. Okay, how did I calculate this depreciation amount? Can you tell me? This is straight line method. What was the formula I followed to calculate depreciation? Historical cost minus scrap value divided by number of years of useful life. This is the method under straight line method. We have to calculate a depreciation this way. So every year I'm going to transfer the depreciation like this. Now listen to this concept, please. Here, how much value is left in the asset account now? You have transferred 10,000 rupees. How much is still left in the asset account? 50,000 is still left. This is known as book value. What is this known as? Book value at the end of a certain year. At the end of that year, the book value is 50,000 rupees. Book value formula is nothing but, how did I calculate the book value? Book value is nothing but the historical cost of the asset minus depreciation till date. Depreciation till date. So that is known as book value. Now, second year again I transfer 10,000. Can you tell me what is the book value at the end of the second year? 40,000. That is why I did not just write, I did not say historical cost minus depreciation. I said historical cost minus depreciation till date, till today. That is, at the end of second year, you have charged depreciation for 2 years. So till date, total depreciation is 20,000 rupees. So 60,000 rupees minus 20,000 rupees. That is the book value of the asset. I hope everyone is comfortable with this concept. So it is 40,000, the book value. After that, again, we are transferring some depreciation. Now, how much is the book value after the third year? It is 30,000. After the fourth year, how much is the book value? It is 20,000. At the end, after the fifth year, what is the book value? 10,000. So remember, at the end of the useful life of the asset also, the scrap value will stay. The scrap value will stay. You're not depreciating. You said this asset will not reduce to zero. It will reduce to 10,000 because the metal will have some value. Even if it is not in running condition, the metal will have some value, residual value, this is known as. So an asset with some scrap value will never go down to zero. The value of the asset will never go down to zero because there will be some value for its scrap. So that is why you see after 5 years also, there is some scrap value in this asset. 10,000 rupees is not written off as depreciation. This stays. It was an estimation that was done at the beginning of the period, the scrap value and estimated useful life. I hope everyone is comfortable with this concept. Yes. Now that is it. This is all the depreciation meaning is. The meaning of depreciation is that this is all the meaning is. Nothing more complicated. That is all the meaning of depreciation is. I hope everyone is comfortable with this. So here we have studied about different terminologies. We have studied about what is historical cost. Historical cost is the cost of the asset purchased. Now, sir, it could be he might have purchased this for 55,000. 5,000 was adding this box. Some cost they incurred for all this. So we will include all such expenses incurred at the point of purchase to the cost of the asset. We will call the cost of the asset. We have to capitalize all the expenses that we have incurred along with the cost of the asset, the purchase cost of the asset. Yes, we do. Anup. I hope everyone is comfortable with this. Okay. Okay, he jumped. What is a depreciable asset? What is a depreciable asset? Simple. A depreciable asset is an asset whose cost of purchase is written off over the asset's useful life. It is an asset that the business will use in its operations in order to generate income. All the tangible fixed assets are depreciable except for land. Except for land. We've already discussed this concept. I have told you about this. Now, examples for a depreciable asset: a building, a machinery, a motor car, a computer or peripherals. All these are examples for uh, depreciable assets. Now, there's a concept of depletion also. I was talking only about fixed asset. The term fixed asset, the term depreciation is used for what? Only fixed assets. What is the term used for intangible assets? Anyone can tell me for intangible assets? What is the term used? Very good. Amortization. Very good. So, there's one more term we use known as depletion. Where do we use depletion? Where do we use this concept of depletion? The concept of depletion is used for certain kind of land. I told you, land is not a depreciable asset, but there are some types of land, land or wasting assets we call it, which lose its value, with usage. That is, the land value is because of the natural resource under it or over it. For example, you have mines, quarries. These sand quarries and all are example for the concept of depletion. Depletion is the exhaustion that results from the physical removal of a part of a natural resource. It could be over the earth, over the land space, or it could be below the land space. That is, these mines and all are below the land space. This is over the land space. Rock quarries, or you have these sand quarries. All these are assets which lose its value, land which loses its value. We call such loss as depletion. Then there is a concept of amortization as well. What is amortization? Amortization refers to spreading an intangible asset's cost over the asset's useful life. The term amortization is also used to refer to writing of the deferred revenue expenditure. So not just for intangible assets, we use this term for even deferred revenue expenditure. Deferred revenue expenditure is a huge expenditure cost, discount on issue of debentures, discount on issue of securities like bonds, preference shares and all that if you're issuing at a discount. These are all known as deferred revenue expenditure. Then examples for intangible assets: patents, trademarks, goodwill, copyrights. All these are examples for intangible assets. All this is to be written off. When we write it off, we don't call it as, just like how you write off tangible assets, like that only you write this intangible assets off also. You don't use the term depreciation. What term do we use? We use the term amortization. So we have seen three terms. We have seen how many terms? Three types of terms, three types of words. What are the three terms we have studied? For the tangible assets, we have studied that for land. Now I'll put the chart. You have to tell me what is the term. Tangible assets, land. What is the term? The reduction in value is known as what? We call it as depletion. Wonderful. We call it as depletion. What about tangible assets other than land? Other than land, it is depreciation. It is depreciation. What about intangible assets? What do we call reduction in value of an intangible asset? Amortization. Amortization. Is everyone comfortable so far? Is everyone comfortable so far? Three terminologies. Okay. Features of depreciation: we know that it is a charge against profits, it is a reduction in value of the asset, it is a permanent and continuous decrease in the book value of the asset, it is caused because of wear and tear, reflection of time, obsolescence, etc. It is a non-cash expenditure. We have discussed all these points, and this point is non-cash expenditure. You're not actually paying any money towards depreciation every year. You have already paid it for the asset. You're just writing it off. It's a non-cash expenditure, but it is an expenditure. Objectives for providing depreciation, true results of the operations of the business. It gives you the true position statement, that is where what is the actual value of that asset is determinable using this depreciation concept. It also helps you know the cost of production. When you're producing something, you're not spending just towards the raw material of that product, you're also using machines to produce it. For example, to make this glass, now, not just the glass material was used; they have used some machine also to make this, make this glass. So the cost of production will include that machine cost also. You have to apportion that machine cost also, and when we apportion it in terms of depreciation. And also it helps you to give an idea about what is the amount that you have to keep aside when is the asset getting older. So it will help you, you know, when the book value keeps on reducing, you will know that the value of the asset is coming down. We should start collecting funds. We have to start collecting funds to get a new asset. As the asset's book value keeps on reducing because of depreciation, you get an idea about it. Then legal requirements. It's compulsory to to charge depreciation as per the Companies Act also. Factors in measurement of depreciation: historical cost, that is purchase cost plus capitalized expenses. I discussed this with you. Estimated useful life of the asset. We estimate how much useful life the asset has. Estimated scrap value, residual value or salvage value, Gujri value also we call it. Depreciable amount. Depreciable amount is what? I discussed this also with you. Historical cost minus scrap value. We have had this discussion about all these things earlier. Okay, journal entries, just quickly see this once. Journal entries, this also we have discussed. What is the entry when you purchase an asset? Asset account debit to cash or bank account. This is the entry to record the purchase of the asset. Every year we have to provide for depreciation. What is the entry to provide for depreciation? Depreciation account debit to asset account. Depreciation account debit to asset account. Then you have to close the depreciation account by transferring the balance in the depreciation account to profit and loss account. This also I told you, right? All these entries also we have discussed. Purchase of asset, you already know. Asset account debit to cash or bank account. This was the journal entry to provide for depreciation. I hope everyone is comfortable with this. Yes or no? Yes. Okay. Next, moving ahead. Okay, this one is important. Please pay attention to this one. When we're selling an asset, this is the entry we pass. Bank account debit to asset account. We generally pass to profit on sale of asset. But in the textbooks and all, what they write is they write profit and loss account directly, they credit, but that is not the case. In real, we first credit the profit on sale of asset account, and then the profit on sale of asset account is transferred. The balance in that account is transferred to P&L account. At the end of the year, it is transferred to P&L account. But technically, when you see this profit on sale is again just a medium to transfer the amount of profit from from the asset account, whatever profit and loss we have written, it will go. It's a vehicle, correct? If it is at a loss, then profit and loss. Just remember this. Profit and loss is credited if it's a profit, because if you remember, the profit and loss account, on the credit side we write all the income. So if it's a profit, we have to credit the profit and loss account. If it's an expense, what should we do in the profit and loss account? If it's a loss, what should we do in the profit and loss account? Debit it. Simple. So here also we have to pass the same entry. How do we calculate profit or loss on sale? How do we calculate profit or loss on sale in accounting books? As per accounting books, how do we calculate profit or loss? Every asset has some value as per the books, right? What is that value called as? It is called as book value. So, how do we calculate profit or loss on sale of an asset? It's very simple. Book value, or rather, first we consider the sale value minus book value of the asset. Book value of the asset. Sale value minus book value. Now, if this number is in positive, what do we call it as? profit. If the sale value is more than the book value, it is profit. What if it is loss? What if it is a negative? It is a loss. So let's put this in brackets. Okay, we will put this in brackets. So profit or loss is equal to sale value minus book value. As simple as that. I'll just tell you for example purposes. Now this particular asset, the scooter, let's quickly run the transitions once. The scooter, 60,000 rupees, 5 years useful life. After first year, I sold it for 55,000 rupees. Can you tell me, have I made a profit or have I made a loss? Have I made a profit or have I made a loss? How much did you sell it at? What is the price I told you? What price did you sell it at? 55,000. What is the book value? As per books, what is the value of the asset? As per books, the value of the asset is 50,000. Because you're selling it after 1 year. After 1 year, you're selling it. So the book value of the asset is how much? 50,000. Are you all comfortable? 50,000. So have you made a profit or have you made a loss? You have made a profit because you're selling it at 55,000. An asset which is worth 50,000 in the books, you're selling it at 55,000. That means you have made a book profit. We call it as a book profit because as per the books it is. So real value could be different. We don't know. We are just discussing the book profit. How much should we record as profit in the books? We have to record it as how much? 5,000 is the profit. So what if you sell after 1.5 years? You sold it after 1.5 years for, let us say, 55,000 rupees only. Not after 1 year, after 1.5 years. Should you charge depreciation for half year? Should you charge depreciation for half year? The answer is yes. You have to charge depreciation for the half year. The second year, only half depreciation is to be charged. So can you tell me what is the book value after 1.5 years? Each box is 5,000 rupees, right? 60,000 minus 3 boxes, 15,000. That is 45,000. The book value of the asset is how much? 45,000. How much have you sold it at? 55,000. That means you made a profit of 10,000 rupees. So every time you're calculating the profit or loss on sale of an asset, remember you have to calculate the book value as on the date of sale. As on the date of sale. That is, if you're selling it in between the year, you have to calculate depreciation for so much period. If you're selling it after 3 months after the start of the year has already started. After 3 months, if you're selling it, you have to charge depreciation for how many months? 3 months you have to calculate depreciation. So like this, you have to calculate depreciation for the part of the year which you have used before selling it. I hope everyone is comfortable. So this is how we calculate profit or loss on sale of asset. Now this is the most important part, and this is where students do a lot of silly mistakes. You know the concept, but you do the mistake with regards to something or the other over here. I don't know how you manage to do that, but you do that. So don't do that. Please keep this in mind. Be completely aware when you're calculating the profit or loss on sale of the asset. So this is how we calculate it. This is the different concept relating to calculation of book value of the asset and the profit or loss. So this is the entry. Now I told you how much did we sell it at? How much did we sell it at? What after 1.5 years, right? After 1.5 years, how much did we sell it at? 55,000 rupees. So how much did you receive in your bank or cash account? How much is the bank account money you've received, or cash account? It could be anything. 55,000 rupees. What is the book value of the asset? See, you can credit how much value is there. How much value is there in the asset account? You can credit only that much, right? The book value of the asset as on that date. How much is the book value of that asset? I'll call it an asset only. 45,000. Asset account 45,000. So you made a profit of how much? You will credit P&L account with that profit for 10,000 rupees. For 10,000 rupees. You made a profit of 10,000 rupees after 1.5 years. I hope you have understood this. Sir, what if you had sold it for 40,000 rupees? What if you had sold it for 40,000 rupees? The entry would be a little different. P&L account, you sold it for 40,000, so you're going to receive 40,000 rupees in your account. How much is the loss you made? Of asset worth 45,000 is being sold for only 40,000. How much is the loss you made because of this? 5,000 is the loss, which will be debited to profit and loss account. I hope you have understood this concept of that journal entry. Very, very simple, not technical at all. It is common sense. Now, the methods for calculating depreciation. We have these methods in our syllabus. As of for your exams, these are the methods applicable for your exams. Okay. Now, what are the methods? There were three methods which have been removed from your syllabus. It is not there since November exams, November 2019 exams. It's not there. With the sinking fund method, annuity method, and provision for depreciation and repairs method. So, repairs and renewals method, provision for repairs and renewals method. I'm sorry, provisions for repairs and renewal method is not applicable for your exam. It could be there in your textbook, but it is not there in your for your exam. It's not there in your syllabus. There was an announcement with regards to this. I'll just show you that announcement also. I'm sure you're aware about this, but just so that you know, again, this was the announcement from the institute saying that annuity method, sinking fund method, provision for repairs method is not applicable for November 2019 exams and onwards. That means for any future exams, it is not applicable. So just showing you the announcement. If you studied, it is there in the textbook. So obviously you will get confused. So just saying it's not there, but it is there in our textbook. What does it mean? Yes, provision for depreciation is there. So the methods we study is straight line method, written down value method, sum of years digits method, machine hour method, production unit method, and depletion method. These three methods are very similar. And haven't been tested in the exam so far. Even sum of years digits method hasn't been tested so far. They are testing one of these methods only, straight line or WDV method. So consider these two methods as very important for your exams. Now, quickly we'll do some questions with regards to straight line method. I'll just discuss the concepts once with regards to straight line method. Please pay attention. Quickly I'm going to discuss. So be with me. Straight line method, the formula to calculate depreciation. What is the formula to calculate depreciation? We just did for that scooter. We were following straight line method, simple average. The formula is depreciable value of the asset. What is depreciable value? Can you tell me what is depreciable value? It is nothing but historical cost minus scrap value divided by useful life in years. Useful life in years. Useful life in years. So this is the formula for calculating depreciation over here. Now, if you have to calculate the percentage for depreciation, this is depreciation per annum. Remember, percentage is to be calculated on the historical cost of the asset. Can you tell me what is the percentage, how to calculate depreciation percentage over here? It is nothing but depreciation per annum, whatever you've got, divided by historical cost. Divided by historical cost into 100. You will get the rate. So the depreciation rate is calculated on historical cost. So remember, the denominator is historical cost. Don't minus scrap value from here. Historical cost, we directly calculate on the historical cost itself. So we have to consider this. So in the question, if they have mentioned the rate, apply the rate on historical cost directly without minusing or without deducting the scrap value. Do not deduct the scrap value directly on the historical cost only, you have to calculate it. Do not do this mistake of minusing the scrap value when they have given the rate. When the rate of depreciation is directly mentioned in the question, do not minus the scrap value from the historical cost. Directly calculate on the historical cost itself the amount of depreciation. I hope everyone is comfortable with this. So I will move on to the problems. I think you've got this material already. Shall we read the question number 1? Ram Limited bought a machinery for rupees 3 lakh on 1/1/2017 with an estimated useful life of 5 years. It was decided that the machinery would be depreciated under straight line method. Now remember, I'm going to go a little fast over here. I'll just tell the depreciation calculation. Ledger accounts, I think I will tell for one or two problems I'll do, but you can fill in the ledger accounts, right? That is just writing the calculations, the amount of depreciation and calculating the book value. I'll tell you how to do it, but I think it's very simple, elementary. So can I go on, move on to this one? Okay. Now what is the cost of the asset here? Bought a machinery for 3 lakh rupees on 1/1/2017 with an estimated useful life of 5 years. It was decided that the machinery would be depreciated under which method? Straight line method of depreciation, and the scrap value was estimated at 50,000 rupees. The machinery was sold on 31/10/2019 at 1,75,000. Drop the machinery account till the date of sale, assuming that Ram Limited follows calendar year. What is a calendar year? 1/1 to 31/12 was known as a calendar year, okay, Jan to December. So they are following calendar year as their accounting year. Okay, shall we start? First, calculate the depreciation per annum. They have not given the rate directly, so we have to calculate the depreciation per annum. What is the formula to calculate depreciation per annum? Historical cost minus scrap value, which is also known as depreciable value. This is working note 1, calculation of depreciation. Calculation of depreciation per annum. Historical cost minus scrap value divided by what, sir? Useful life. Useful life, which is in years. Now tell me the numbers over here. What is the historical cost of the asset? 3 lakh is the historical cost of the asset. We bought it for 3 lakh minus scrap value. How much was the estimated scrap value? 50,000 was the estimated scrap value. How much is the useful life of the asset? How many years did they say? Useful life of the asset, it was estimated at 5 years. So what is the depreciation amount? Annual depreciation is equal to 50,000 rupees. As simple as that. Now, shall we start writing the depreciation account? I mean, machinery account, sorry. This is in the books of, have they given the party name? In the books of Ram Limited. In the books of Ram Limited. Should I increase the ink? Okay. Now, first, when you buy the asset, what date did you buy the asset? You bought the asset on 1/1/2017. To cash or bank. How much is the amount? How much was the cost of the asset? The cost of the asset was 3 lakh rupees. The cost of the asset was 3 lakh rupees. At the end of the year, charge depreciation 31/12/2017 by depreciation. You're reducing the value of the asset. How much is the depreciation amount? How much should you reduce it to? You have to reduce it to 2,50,000 by depreciating 50,000 at the end of the year. The amount of depreciation we've already calculated. Working note 1. So the book value of the asset at the end of the first year is, by balance carried down, 2,50,000. This is the book value of the asset. ₹3 lakh. Here I get this balance down to balance brought down 2,50,000. This is on 1/1/2018. Now at the end of this year, you have to charge depreciation again. Have you sold the asset in this year? Was it sold during this year? Was it sold during 2018? No, it was sold during 2019, right? So at the end of the year, just charge depreciation by depreciation account. Amount is how much? 50,000 rupees. You can write by cash or to bank. Either way, it's not wrong. How much is the balance? Book value of the asset at the end of the second year. 2 lakh rupees is the book value of the asset at the end of the second year. To balance brought down 2 lakh rupees. This is on 31/12/18. This is on 1/1/2019. Are we selling this asset in this year? We are selling this asset in this year. On which date are we selling it? 31/10. Now remember, before we sell it, we have to charge depreciation. We have to charge depreciation because we have used it for 10 months, right? We've not used it for the whole year, but we have used the asset for how many months? 10 or 9 months? We've used it for how many months? We've used it for 10 months. Fantastic. We've used it for 10 months. You have to include October as well. So 10 months it will come up to. So on 31/10, let's charge depreciation 2019 by depreciation. Could you please tell me how much is the amount of depreciation I have to charge? I have to calculate it. 50,000 into 10/12. 50,000 into 10/12. The annual depreciation was 50,000 into 10/12. We have used it for 10 months. How much is the depreciation amount you get? 41,667. Is that correct? Yes. Avoid writing decimals in the ledger account. Now, we can calculate the book value of the asset. Now, this is only one asset in this case, so no problem. But if we have more than one asset, it's always better to give a working note. I'll give it over here. Working note 2. Always have this format in mind for calculation of profit or loss on sale of asset. I advise you to have this format in mind every time. What is the format, sir? The format is calculation of book value. Okay, that is what is to be done first. Calculation of book value. What is the cost of the asset? Historical cost of the asset. See, for this method, you don't need it. For this problem, you don't need it. But I want to tell you the format. That is why I'm putting it. How much is it? 3 lakh. Less depreciation for 2 years. This is a straight line method. So directly you can say 2 years. How much is it? For 2 years, 50,000 into 2. That is 1 lakh. So book value on 1/1/2019 is how much? 2 lakh. But is this required? No, we have to charge depreciation for how many more months now? We have to charge depreciation for the part of the year, right? This was for whole years I charged. 2 whole years we've used. So for whole years I charge. Now for part of the year, depreciation till 31/10/2019. 10, 2019. Are you all following? Here I charge for whole of the year. The format can be a little different. You can charge for every year 50,000, 50,000, like that you can show. Or you can show, because the straight line method we can do it directly. For WDV we have to calculate for each year systematically, but here it's same. So I just wrote for 2 years together, 50,000 into 2. Here I have to calculate depreciation for 10 months. So this is how I calculate it. 41,667 I get. And the book value is how much? Book value on date of sale. On date of sale, that is 31/10/2019. 1,58,333. Is this correct? 1,58,333. Yes. Now we have to calculate profit or loss on sale. How much is the sale value of the asset? How much did you sell it for? You sold it for 1,75,000. You can write the formula first. I'm assuming you know all this. Sale value minus book value, because I've written it earlier, right? What is the sale value? 1,75,000 is the sale value. What is the book value? We just calculated the book value as on date of sale. 1,58,333. So it is 16,667. Could someone tell me, is this profit or loss? What is this? Is this profit or loss? This is profit. This is profit, because the sale value is more than the book value. Profit is 16,667. I advise you to do one more thing over here. Pass a journal entry. It will ease our job when we pass the entries in the account. It will ease our job. It will ease our work. So please pass a journal entry for this. Here itself, as a part of working note. What is the journal entry? How much do you receive in your bank account? 1,75,000. What is the book value of the asset? 158,333. Profit and loss account is credited because it is profit. So remember, profit and loss account is to be credited if it is profit. So 16,667. Now post this entry over here, we write it like this, okay? We write it like this. By bank, we write the whole amounts over here. By bank account, 1,75,000. These are two separate entries actually. We combine the entry and we write it. It is actually two separate entries, but have a practice of writing it combined only. How much is the profit? We have to debit that profit and loss account. How much is the profit? 16,667. You could have calculated the balance also. Basically, you can total it up and calculate the balance also for this problem. Because for this problem, there is only one asset in this account which is being sold. I did that working note because in many problems, how it is like, there will be more than one asset. There will be more than one asset. But if there is only one asset, you can directly put the numbers over here and determine the profit or loss. Now for this particular problem, you could have done directly. How much is the total? 2,16,667 is the total. So you can directly calculate it. But in our exams, don't expect such a simple problem. That is why I did not, I did that working note for that sake. Because do not expect a simple problem like this for exams. This was just for quick conceptual brush up. I did this. Now can we go to the question number 2? Now written down value method, WDV method. What is this method of WDV? Under written down value method, what we do is, what we do is, the depreciation amount every year is calculated on the book value of the asset or the written down value of the asset. So every year, here how did we calculate the book value? It was same every year in SLM. But in written down value method, that is not the case. In written down value method, the depreciation is calculated as a percentage on the written down value of the asset. So at the end of the year, whatever balance brought down or balance carried down, and at the beginning of the year, whatever balance brought down you will have, on that amount we charge depreciation, we apply the rate and we calculate the amount of depreciation. So this is the funda, or this is the concept behind written down value method. I will repeat it, please pay attention. Under written down value method, the depreciation is calculated as a percentage of the book value of the asset. The book value of the asset. The book value is also known as written down value. Now, let's look at this question, and I will discuss how it is done in this question only. We will discuss through this question itself. This is a good question, potential exam problem. Questions like this are asked for your exams, so please pay attention when we do this question. X purchased a machinery on 1st January 2017 for rupees 4,80,000 and spent 20,000 on its installation. Could you please tell me what is the cost of this asset? What is the cost of this asset? The cost of this asset is 4,80,000 plus 20,000. What is the cost of this asset, guys? 5 lakh rupees. You have to capitalize both of it. So the cost of this asset is 5 lakh rupees. Wonderful. On July 1st, 2017, another machinery costing 2 lakh was purchased. Now see, one machinery account will have two assets. Now this is where that working note and all comes into picture. If you sell one of the asset, you have to calculate individually what is the WDV of that asset, book value of that asset on the date of sale. So that is why that working note is important. On 1st July 2018, the machinery purchased on 1st January 2017, having become scrapped, was sold for 2,90,000. And on the same date, fresh machinery was purchased for rupees 5 lakh. Depreciation is provided annually on 31st December at 10% per annum on written down value. Prepare machinery account for the year 2017 and 18. Okay, shall we start doing this problem? Good problem, easy problem, just need to have control of the problem, that's all. Okay, now machinery account, have they given the company's business in the books of X? In the books of X. What is the cost? First, we have two machineries over here. First one was purchased on which date? 1st January 2017. Okay, could you please tell me when are the books closed? When are the books of accounts closed by this business? Is it March or is it December? It is closed on December, okay? To bank, you can write to cash or bank, you can write to cash, you can write to bank. What is the cost of the asset? 5 lakh rupees. We have to capitalize everything. Cost concept. This is because of the cost concept. I discussed this on day one. This is cost concept. Because of cost concept, we have to capitalize it. So 5 lakh rupees. What not mentioned, Nikhil? Read the question. Depreciation is provided annually on 31st December. That is where it was mentioned, okay? Now, can I move ahead? Have we purchased anything? Is there any more transaction over here, or that's it? In 2017, is there any other transaction? There's one more, right? What is the other transaction? We have purchased on 1st July 2017. We have purchased the machinery costing 2 lakh. So shall we record it? 1/7/2017 to bank account 2 lakh rupees. Done. This is it. Only two machineries. Now charge depreciation on 31/12. By depreciation account. Now, what is the depreciation rate given? Have they given the rate of depreciation in the question? How much is the rate given? Depreciation? 10% is the rate of depreciation given. So we have two machineries with us. We will calculate over here only two machineries. Machine 1, 5 lakh into 10%. It was used for the whole year, right? 5 lakh into 10%, which is equal to how much? 50,000. What about the second machinery? Was it used for the whole year? No, sir. The second machinery was not used for the whole year. It was used for how many months? Starting from July up till 31/12. Can someone calculate? 1st July to 31 December. That is July. Okay, you know the calculation, right? July, August, September, October, November, December. So 6 months. On 2 lakhs, 10% into 6 by 12. That is equal to how much? 10,000. So total depreciation 60,000 for the period. 60,000 is the depreciation for the period. Comfortable or not? Okay. What is the book value of the asset? Both the assets put together, what is the book value of these machines? The balance carried down. The total is 7 lakh. And the balance is by balance carried down 6,40,000. 6,40,000. This is on which date? 31/12/2017. On 1/1/2018, to balance brought down 6,40,000. Now, is there any transaction in this year 2018? Yes. On 1st July 2018, the machinery purchased on 1st January 2017 was sold. For how much price was it sold? 2,90,000. Can we calculate the profit or loss on sale of that asset? Yes. Is it machinery 1 or machinery 2 which is being sold? Machinery 1 or machinery 2? It is machinery 1 that was purchased first. It is being sold now. So first calculate the book value. Always have this format in mind. What is the historical cost of that machinery? 5 lakh rupees was the historical cost of that machinery. Depreciation for first year, or you can say depreciation for year ended. YE stands for year ended. 31/12/2017 was 50,000. You have already calculated it, right? 4,50,000. Should you charge depreciation on this asset for this year? Yes. For how many months should you charge depreciation? For 6 months you have to charge, or 7 months. When was it sold? It was sold on 31st July or 1st July? It was sold on 1st July. That means how many months? Should you include July month? No, you should only till June. That is total of 6 months. So depreciation till the date of sale, which is 1/7/2018. Can you tell me the depreciation amount? 4,50,000 into 10% into 6 by 12. So that is 22,500. So what is the book value on the date of sale? 4,27,500. Have you sold it at a profit or have you sold it at a loss? Profit or loss? What do you think it is? Sale value minus book value. What was the sale value? Is it 2,90,000? The sale value is 2,90,000. What is the book value of the asset? We just calculated it, 4,27,500. So it is a loss because the answer is in negative. So we will get it as loss, 1,37,500. Everyone comfortable or not? Comfortable with this? Yes. Have a habit of passing a journal entry below. What is the journal entry? Bank account debit. How much amount are you receiving in your bank account? 2,90,000. Should you debit profit and loss or should you credit profit and loss? What do you think you have to do? Is it a loss or is it an income? You have to debit profit and loss. Why, sir? Because it is a loss. So profit and loss is to be debited, remember. How much is the loss amount? 1,37,500 is the loss amount. 1,37,500 is the loss amount. And how much is the book value of the asset? We have already calculated it. What is the book value of the asset? 4,27,500. 4,27,500. Now, before we get in over here, we have to pass an entry for depreciation. Don't forget to do this. For how many months depreciation is this? This is for 6 months. We have to calculate the depreciation. How much is the amount of depreciation we calculated for 6 months? 22,500. Always don't forget to do this. Pass this entry. Then you have to pass an entry for sale by bank account. How much is the sale amount? 2,90,000. Also by P&L account, this is for loss. Working note 1. 137,500 is the loss amount. Did you purchase another asset? Yes, we purchased another asset. For how much did we purchase another asset? 5 lakh rupees. So we have to write over here. This is also 1718 to bank. 5 lakh. We're purchasing an asset, so we are debiting this account. Machinery account is an asset account. When it goes up, we have to debit it. We are buying a new asset. That means it is going up. That is why we are debiting it. Now charge depreciation at the end of the year. 1/7/2018. At the end of the year, we have to charge depreciation, right? 31st of December 2018 by depreciation. Could someone tell me how many assets do we have now? How many machines do we have now? Do we have 1 or 2? Sir, we sold 1. We had 2 initially at the beginning of the year, but we sold 1, right? How is it still 2? Because we purchased 1 more. Very good. We purchased 1 more. So total how many assets do we have? We have 2 assets on 31/12. So we have to charge depreciation on 2 assets. Should you charge depreciation on both the assets for the whole year? No. On the asset that we already had, that is machinery 2. Okay, that was the asset which we had bought, right? Machinery 2. Do you remember the asset that we had bought last year? Machinery 2. On that, you have to charge depreciation for the whole year. On that, you have to charge depreciation for the whole year. And on the new machinery, you have to charge depreciation, which is the third machinery, only for 6 months. Now, this is where people do mistakes. Sir, should I calculate directly on 2 lakh the machinery depreciation on this? This is where you go wrong. Should you calculate directly on 2 lakh? The answer is no. On written down value of that asset. What is the written down value of that asset, sir? Could you please tell me what is the written down value of that asset? It is 1,90,000. How did you get it as 1,90,000? See this. This is machinery 2, right? 2 lakh we purchased. We charge depreciation. How much is the depreciation charge at the end of the last year on that asset? 10,000 rupees was the depreciation charged on that asset. So what is the book value of that asset? The book value is, I'm going to write it in mini digits. So forgive me because I don't have space. So 2 lakh into, we can do a working note also for this, but I hope you got this. 2 lakh minus 10,000 into 10,000, 10%, right? 10%, right? Or 20%? 10%. 10%, which is equal to how much? This is 19,000. What about this next machinery, the new one which we purchased? We purchased it for 5 lakh. Have we used it for the whole year? No, we have used it for only 6 months. So 10% into 6 by 12. How much is that? You get it as 25,000? Yes. How much is the total depreciation for the period? 44,000. And could you please tell me what is the book value of the both the machineries now? The total is how much? 11,40,000 is the total. 11,40,000 is the total. What is the balance? 6,46,000. So, 1/1/2019, I'll just write over here to balance brought down 6,46,000. I hope everyone is clear with this. Only thing you have to be careful about is this. This is where you go wrong. I have one more question. This is an easy question. I think you can do this as homework. Even the next one is homework. Try these questions. I'll discuss the answer. I'll tell you the solution. When we have a doubt solving session for depreciation, I will tell you the solution for this. But solve this and come. Question number 3 and question number 4. Okay, now next one, question number 5. So this is a new method again, one more method. Which is this method? Sum of years digits method. Sum of years digits method. Shall we first discuss what is this method about? Sum of years digits method. Okay. What is sum of years digits method? Now under this particular method, sum of years digits method, we have to follow certain steps. Okay. Under sum of years digits method, we have to follow certain steps. Very simple steps. Step number 1, calculate the sum of useful life. Like for example, if they have given in the question that the useful life of an asset is 5 years, calculate the summation of that 5. How to calculate it? It is 5 into 5 plus 1 divided by 2. Or you can also do it 5 plus 4 plus 3 plus 2 plus 1. How much do you get it as? 15. If the useful life is 5, it is 15 is the sum of years. So like this, first we have to calculate. N is useful life. So we have to calculate the sum of years. This is step number 1. Yes, Ronson, possible. Then for calculation of depreciation, how do we have to calculate? We have to first consider the number of years, rate of depreciation if you are calculating, number of years of useful life of remaining of the asset at the beginning of the year divided by sum of years into 100. Sir, looking at this formula, I'm not understanding anything. Could you explain with numbers? Please pay attention now. What is the step 1? Sum of years. Very simple to calculate sum of years, n into n plus 1 divided by 2. Step 2, if you have to calculate rate, you can skip this step. You can, just forego this step. If you have to calculate the amount of depreciation directly also, you can calculate. I'll tell you how to calculate it directly also. But if you have to calculate the rate, in case they have asked the rate of depreciation, so the rate of depreciation is calculated like this. Number of years remaining at the beginning of the year. Number of years of useful life remaining at the beginning of the year. For example, if the useful life of my asset is 5 years, for the first year, can you tell me how many years are left? For the first year, at the beginning of the first year. At the beginning of the first year, how many years? How many years of useful life is left? 5 years, full 5 years, right? So, for the first year depreciation rate, how we have to calculate is 5 divided by 15. Sum of years we have already calculated over here, which is 5 into 5 plus 1 divided by 2, which is nothing but 15. 5 divided by 15. If you're talking about rate, you have to calculate in terms of percentage. So into 100, what is the percentage you get? What is the rate of depreciation for the first year? 33.33%. 33.33%. What is it for the second year? Can someone tell me how many years are left at the beginning of the second year? Now I'm calculating depreciation for the second year. Everyone, I want maximum participation. How many years are left at the beginning of the second year? 4. What is the sum of years? Is the sum of years going to change? No, it's not going to change. It is going to be the same. 4 by 15 into 100. What is the rate you get? 26.66% or 67%, whatever. Third year. What is it for the third year? At the beginning of the third year, how many years of useful life is left? At the beginning of the third year, how many years of useful life is left? 3 divided by, what is the sum of years? 15. It is going to be the same into 100. Percentage is going to be 20. What about the fourth year? At the beginning of the fourth year, how many years are left? At the beginning of the fourth year, how many years of useful life is left? Fourth and fifth one. That means how many years are left? 2 years are left. So 2 divided by 15 into 100. How much do you get this as? 13.33%. What about the last year? At the beginning of the last year, how much is left? 1 by 15 into 100. This is 6.67%. I hope everyone is comfortable with this. I will tell you simply what to do is year 1, 2, 3, 4, 5. 5 years, right? And denominator, down you will write over here 5, ulta, 4, 3, 2, 1. So this is the remaining life at the beginning of each of these years. Remaining. There are some words where I make constant mistakes in spelling. Remaining is one of those. I have 5 different variations of spellings I write. My subconscious mind writes 5 different spellings of, remaining. I don't know what this is called, but there is that problem with me. Yes. I write one extra n. Sometimes I don't write that n. I don't know. So remaining years is at the beginning of the year 5, 4, 3, 2, 1. So this is the remaining years. So every time they give you, you have to do this, write this table, and you can easily solve any problem. I'll give you one more question. Now you have to tell me the rates. Okay, ready? 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 You have to calculate. I'm not going to help you at all. Useful life is 8 years. Useful life is 8 years. Tell me the rate for fourth year. Be careful. Don't do gadbidi. Be careful and tell me what is the rate of depreciation for fourth year. Take your time. I will give you 20 seconds time. Lot of time. 20 seconds I will give you. Tell me what is the rate of depreciation for the fourth year. First tell me what is the sum of years. Did I give you 20 seconds or did I give you lesser than that? Sum of years was how much? Sir, 8 into 8 plus 1 is 9 divided by 2, that is 36. Is that correct? 36. In a fraction, I think you have studied this from 5th or 4th standard. In a fraction, there are two elements in a fraction. What is the upper element known as? What is this known as? Numerator. What is this known as? Denominator. Remember, the sum of in the sum of years digits method, the denominator is going to be the same for every year. For all 8 years, the denominator is going to be the same. In the previous problem, it was the same. What is the denominator in the previous problem for all the years? It was 15. The sum of years digits, 15. For this problem, what is the denominator going to be for all the years? It's going to be 36. It's going to be 36. What will change? What will change? Let's use a different highlighter. Yeah. Okay. What will change? The numerator will change. How will the numerator look like? I told you, you have to write like this. 1, 2, 3, 4, 5, 6, 7, 8. And here 8, 7, 6, 5, 4, 3, 2, 1. Wow, what rocket science. Now for the fifth year, can you tell me for the fifth year, what is the, sorry, I asked for the fourth year, right? For the fourth year, what is the numerator going to be? It is going to be 5. So how to calculate the rate now? 5 divided by 36 into 100. 13.88 percentage. 13.88 percentage or 89 percentage. Have you all followed this? Understood this? Yes. That's it. That's all we have to do. Now, how to calculate amount of depreciation? If they have not asked the rate, you can directly skip the step and you can calculate the amount of depreciation directly. It is very simple. HC minus SV. What is this HC minus SV known as? Depreciable value. So depreciable value, you can either do a rate by 100 or you can replace this with, what is the formula for rate? Can you tell me what is the formula for rate? We had calculated the rate just now, right? What is the formula for rate? That remaining life divided by sum of years into 100. Into 100. You can replace it. This rate can be replaced with this. So 100, 100 gone. So what we can do is HC minus SV into remaining life divided by sum of years. Yes. I hope you followed this. So we can directly write HC minus scrap value minus historical cost minus scrap value into remaining life into sum of years. You can calculate it like this also, or you can multiply it with the rate by 100. So when you do this, you skip the second step. If they have not asked the second step, sometimes they ask in the question, they might ask in the question what is the rate. So you should know how to calculate the rate also. But if they don't ask the rate, if they directly ask you to calculate the amount of depreciation, you can directly calculate it like this only. HC minus HV into remaining life into sum of years. For example, in that previous question, let us take the historical cost as 5 lakh, scrap value as 0. 5 lakh into 5 lakh minus 0. And I told you to calculate depreciation for which year? Fourth year, right? I told you to calculate depreciation for the fourth year. So can you tell me what is the numerator going to be? Remaining life is how much? 5 years. Divided by what is sum of years? 36. So what is the amount of depreciation for the fourth year? Should you multiply this with 100? No, don't multiply this with 100. I told you the 100 goes off over here. Don't multiply it with 100. 69,444. 69,444 directly we can calculate 0.44. Okay. Or else you can multiply 5 lakh into 13.88%. You will not get accurate number because it is in decimals, right? 13.88 is rounded off to the second decimal point. So you will not get the accurate answer. I think you'll get it as 69,400 if I'm not wrong. So that 44 rupees is eaten up because of that rounding of that decimal. So here you will get a little more accurate number. This is also not exactly accurate. There are decimals after this, but a little more accurate than the previous one. So this is how we calculate depreciation under sum of years digits method. I hope everyone has understood this. Can I go to the next problem? Yes. Mrs. Akash purchased the machinery for rupees 10 lakhs. Estimated useful life and scrap value were 10 years and 1,20,000 respectively. The machine was put to use on 1/1/2010. Show the machinery account and depreciation account in their books for 2015 by using sum of years digits method. Can you tell me how many years? Now one more question. Here a confusion will arise. Sir, should I consider calendar year or should I consider the April to March? What should I consider as a question which people get obviously? So what should I consider over here? Calendar or the financial year concept, which is April to March? We have to consider calendar year because of this term, okay? This is the clue. 2015 they have said, no, they did not say 2015-16. They said 2015. 2015 means calendar year. So that is why we have to follow what? We have to follow what? Calendar year. What if they had said 2015-16? We have to calculate financial year. And one more thing, sum of years digits method, don't expect question to come in decimals. It will be at the beginning of the year. The purchase will be at the beginning of the year and the everything else will be at the beginning of the year only. They will not give questions with decimals and calculations over here. It's not that complex for us, so don't worry about it. It will not come. It will be always a full year. For 2015, that means on 2015 end, you have to calculate. You have to draw only 1 year's machinery account actually. Show machinery account and depreciation account in their books for 2015. Only for 1 year we have to calculate. That is 31/12/2015 we have to write by using sum of years digits method. Can we calculate the depreciation for 2015? You can calculate for all the years if you want. Just for practice, you can do it for all the years. But if you want to do it for only 2015, can you tell me when was this asset purchased? 2010, 11, 12, 13, 14. So we are calculating for 15, right? I'll stop over here. Can you tell me what is the useful life of the asset? How much is the useful life of the asset? 10. So at the beginning of 2010, how many years is left? Remaining life? 10. 2011, 9, 8, 7, 6, 5. Have you followed this? If you have 2014, 15, this is sixth year basically. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So if you had the other years, it would have been 4, 3, 2, 1. Like this, it would have been. Okay. Now tell me, what is the sum of years in this case? Sum of years digits we call it. What is it? The useful life is 10. So n into n plus 1 we have to do divided by 2. N is 10. 10 into 11 divided by 2, which is equal to 55. Is that correct? 55 is the sum of years. Wonderful. 55 is the sum of years. So the amount of depreciation for 2015 is equal to, what is the historical cost of the asset? What is the formula? Okay, we'll write the formula first. Depreciation is equal to historical cost minus scrap value. I will directly write that only, which is, I'll not write the rate and all that. I'll write that formula I told you. Secondly, remaining life divided by sum of years. What is the historical cost of this asset? Is it 10 lakhs? 10 lakhs minus scrap value. Is it given? Is there any scrap value? 1,20,000. What is the remaining life? We are discussing 2015. So the remaining life is this, 5 years. What is the sum of years? 55. So what is the amount of depreciation? Is it 80,000 rupees? Yes. It is 80,000 rupees. Is everyone comfortable with this? Are you following what is happening over here? Yes. Now I have a question. We have to draw. What is the doubt relating to remaining life? How many years are left at the beginning of 2015? Useful life. If you are confused, write it like this. 1, 2, 3. Go on writing for 10 years. 6, 7, 8, 9, 10. And 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. This is 2010. This is 2011. This is 2012. This is 2013. This is 2014. This is 2015. This is 2016. This is 2017. This is 2018. You can write like this. Now, we have to draw we have to draw the asset account for which year have they asked? Which year they have asked? 2015. Now the interesting question will be, what is the book value on 2015? At the beginning of 2015, what is the book value is the question. I know the depreciation. I have calculated the depreciation. What is the depreciation for 2015? The depreciation is simple. 80,000 rupees we have already calculated. But to start the asset account for that year, we need to know the book value of that asset at the beginning of the year. How to calculate this? Did you follow this? How to calculate the book value at the beginning of 2015? We have to calculate the depreciations. What is the formula for book value, by the way? What is the formula for book value? Book value is equal to what is the formula for book value? Book value is equal to, I told you the formula, historical cost minus, what are you saying? What salvage value? Book value formula is salvage value, is that? Historical cost minus salvage value is the formula of book value. What is book value formula? What rubbish answers are some of you giving? This is what happens when we think we know everything, but we know nothing. I discussed this earlier. How to calculate book value? What is book value? Book value is historical cost minus depreciation till date. Depreciation till date. Historical cost minus depreciation till date. Now in this, we have to calculate the depreciation till date. So we have charged depreciation for 2000 up till 2014. We have charged depreciation. Okay, we have already charged depreciation up till 2014. Now, sir, should we sit and calculate how much is the depreciation charged every year, or is there any shortcut to do this? Yes, we will prepare machinery account. To prepare the machinery account, we want the opening balance of the asset, right? So that is why we are discussing this. We are calculating the opening balance. Now see this. We have to drop the machinery account for which year? For 2015. So here I have to write 1/1/2015. There is some balance, two balance brought down, which I don't know. I don't know the balance. 2015 balance, opening balance, I don't know. How to calculate this is what I am discussing. Are you following? To calculate this balance as on everyone, as on 2015, 1/1/2000, they have asked only for 1 year. They have asked only for 1 year depreciation account. But we need to know the opening balance on 1/1/2015 to know the to charge the depreciation for that year. So that is why if they had asked till 2015, it was very easy. If you should start from 2010 and then you can write till 2015, you can calculate depreciation every year and you can find out. But now they have asked only for 1 year, and this is where you have to be careful. You have to calculate the opening balance first. Let us see who can do it. I will give you some time. Let us see if anyone can do it and tell me. Okay, I've got multiple answers. Depreciation till date. Okay. How to calculate depreciation for each year? First year, what is the depreciation? 8,80,000 into. What is the numerator for the first year? What is the numerator for the first year? 10. What is the denominator for the first year? 55. For the second year, what is the amount? 8,80,000. 8,80,000 is what, sir? Historical cost minus scrap value. Correct? No, that is what I am writing over here. To calculate depreciation, we have to do HC minus SV. So I am writing that 9/55. I hope everyone is understanding this. What I'm writing 7/55, I'm writing 6/55. Are you following this? Yes. I'm doing the longer method first. I'll tell you the shorter method later. This is for 2010. This is 11. This is 12. year 3 is 12, year 4 is 2013, this is 2014, this is 2015. Okay, now you can do it like this. This is the longer way to do it. Instead of doing this, observe over here, is the amount same every year? What you're multiplying, is the amount same? Yes, the amount is same. Is the denominator same? Yes, the denominator is also common. So what you can do, instead of multiplying this, okay, not for this year, sorry. This year we have to calculate book value till here, right? Till here we have to calculate, not for 2015, correct. So if I have to calculate the total depreciation up till this date, can I do it directly? I can do it directly. How to do it directly? 8,80,000 into 10 plus 9 plus 8 plus 7 plus 6 divided by 55. How much do you get? Total depreciation till date is how much? Total depreciation till date is how much? This is 40, is it? 40 by 55. So you get it as 6,40,000. The total depreciation till date is how much? 6,40,000. So can you tell me what is the book value? What is the formula for book value? This is the depreciation till date. What is the formula for book value? It is historical cost minus depreciation till date. Here, what is the historical cost? 10 lakh is the historical cost minus 6.4 lakhs. What is the book value? 3,60,000. Should I consider 2015 also? Should I consider the 2015s also? The answer is no. We are calculating book value as at the beginning of the year. If you do that, you will get the book value at the end of the year. Are you following? At the end of the year, book value we will get. But we should not consider this year depreciation. We have charged depreciation only up till 2014 end. So now, to balance brought down, you can write a working note for this. Calculation of book value at the beginning of, this is working note 2, right? First one was relating to the depreciation, or calculated depreciation. So working note 2, calculation of book value at the beginning of 2015. At the beginning of 2015. If you did not understand the shortcut method, you can do it in the longer way also. You will get the same answer. Okay. If you can do it in the longer way also, you will get the same answer. How do we get it, sir? Here 8,80,000 into 10 by 55. You can do it like that also. It will just consume a lot of time. Instead of that, understand this concept of what we have done. To tell it in very simple terms, it is like this. It's like a big pizza. Machine's cost is treated like a big pizza. And you split it into slices. Denominator. What is the denominator? How many slices do we make? What is the denominator? We split it into how many slices? 55 slices. Alright. Is divided into how many slices? 55 slices. And every year, these many slices are written off as depreciation. That is, for the first year, 10 slices are written off as depreciation. For the second year, 9 is written off as depreciation. Then 8, 7, 6. So far, how many slices have you written off and how much is left? That is known as the book value. How many slices have you written off and how much is left is known as the book value. So far, how much is the total depreciation you have charged? 40 slices out of 55, you have charged 40 slices. So what is left? You can also calculate like this. You can directly 15 divided by 55 into 8,80,000. If you do, you should get the same answer, right? How much is the answer you get? Plus salvage value you have to do. This is 2,40,000 you get, plus salvage value you have to do. You'll get it as 3,60,000 that way also. Instead of doing that, instead of that confusion, you can do it like this. Out of how many slices? 55 slices. How many slices you have written? 40 slices you have written off. So that means 15 slices, 40 slices have been written off out of the total value of 8,80,000. The depreciable value was 8,80,000. This is how much we're going to depreciate over the period. This is the total depreciation we're going to charge. Out of that, we have charged 40 by 55, which is equal to how much is the this is depreciable value. This is the depreciable value. This is how much you're going to depreciate. Like in that scooters example I gave you initially, how much were we going to depreciate in that scooters example? 50,000 rupees, right? So 50,000 rupees was to be depreciated over 5 years. So here also 8,80,000 is depreciated in 55 slices. Every year we keep on calculating 10, 9, 8, 7, like that we put slices. So total 40 slices we have calculated. How much do you get this as? 6,40,000. I hope you followed this. So now, how much is the balance brought down over here? We'll complete this working note. Please write this as part of your working note, this table, write this as this one. Write it as your working note. I don't write LF because simply we don't fill it. No, you don't have to write LF even in the exam. Ledger folio. Okay. Total fraction of depreciation charged is 10 plus 9 plus 8 plus 5, 7 plus 6. Is this right? Should I stop here? Divided by 55. So that is equal to 40 by 55. Total dip charged is equal to 10 lakh minus 1,20,000 into 40 by 55, that is 6,40,000. Book value at the beginning of 2015 is equal to historical cost minus dip till date. What is the historical cost? 10 lakh. What is the historical cost? 10 lakh. Dip till date is 6.4 lakh. So the book value was 3,60,000. 3,60,000. Have we calculated the depreciation for this year already? What is the depreciation for this year? 80,000 is the depreciation for this year. And can you tell me what is the book value? By balance carried down is 2,80,000. You can drop, okay, do this as homework if you want to gain some conceptual understanding. If you're still not strong with the concept, do for all 10 years. Do calculate depreciation for all the 10 years. Do it today only. For all the 10 years, calculate depreciation. Charge depreciation for all the 10 years. See how that is flowing, how that is going. Okay, do it once. As I mentioned earlier, this has not been tested in the exams yet. Therefore, I I'm not sure how important it is, but it can be tested. But I think their focus will be on SLM and WDV for a simple reason that this is not followed so popularly. This method is not followed so popularly. So their focus will be on SLM and WDV. But do this method. My advice would be do for all 10 years. If you've not understood the concept or if you're not conceptually strong with this, do for all the 10 years. It's easy actually. It's nothing. If you look at that pizza example and if you think of that pizza example I gave you, it's as simple as that. It's nothing difficult. All right. So they have asked us to do the depreciation account also, I think, right? So depreciation account, only all we have to do is we have to write to machinery. How much is the amount of depreciation you charge this year? 80,000 on 31/12/2015. Transfer it 31/12/2015 by P&L account. 80,000 rupees. We'll have to do some more things in this in depreciation chapter, and then we can move on to consignment in the afternoon. All right, I'll stop over here for the lunch break. See you in the afternoon, guys.
Thank you, sir. Students, now you all can take a break for lunch. So we'll meet again at 2 p.m. sharp. See you all later. Thank you, sir. Thank you, students.
Thank you, ma'am.